All right. So, hey, I am excited today to have Chris Fisher from My Credit Guy on to talk all things credit today. And Chris, you and I were just talking before we started, where I was just sharing with you. I've been with Movement for about 6 months now, and I have never had access with companies I worked for in the past to a resource like you and what your team is doing. And so I really wanted to kick it off that way because I will butcher it if I try to explain what you guys do, because you guys do a lot. And the partnership you guys have with Movement and everything you guys are doing to help our clients that have some blemishes, have some bumps and bruises to get those things fixed and get to the closing table is just incredible. So first, man, thank you for being on and talking through some of this stuff today. But tell us a little bit about My Credit Guy and everything you guys do, Chris.
Yeah. Well, thanks for having me, obviously, Glenn. We were chatting, like you said before, and anytime I can get the opportunity to, chat about what My Credit Guy does and how we operate, I love that. Just because, there are a lot of companies out there that aren't like My Credit Guy, unfortunately. Especially in the credit repair world, it's known as like a shady industry, and we don't get partnerships like Movement Mortgage by being a shady credit repair company, right? The way that My Credit Guy has kind of formulated and formed around, what was it, about 8.5 years ago. Good buddy myself and his wife actually were working for that typical credit repair company back in Iowa, right? Not getting people back to the closing table. It just wasn't a good fit for us. So we ended up moving all the way down to Phoenix, Arizona, or Gilbert, Arizona. We ended up starting My Credit Guy out of the den of our house as a three-man crew. And now we've got, like, I want to say, like 70 full-timers at any given time. We're growing every single month. We've got 4 branches across the country at this point. And it's just one of those things where we're actually opening our fifth one over here in Fort Myers, where I'm at now. And it's just we've done stuff by the book from day one. We start everything off with a full free review of the credit report. We let the borrower, the lender, and the realtor know if we can help, how we can help, and then how long it's going to take. And typically that's a 2 to 4, maybe 3 to 5 month program, depending on the situation, right? Every situation is a little bit different. But usually it's about a 2 to 4 month service back to the closing table. Now, what happens in those 2 to 4 months is once we get the okay from the borrower, we really start to get running, right? We hit the ground running because the whole goal is to get people back to the closing table, right?
Yeah.
Joe Schmo went to Glenn Wilson mortgage team to get a home loan, and unfortunately he got denied due to credit, right? So my process is just a speed bump in the home loan process. I'm not like a credit repair guy or anything like that. I am by trade, but I am just a speed bump in the home loan process. So we're hitting the ground running. We initially start off by doing a full scrub process of the credit report to get as many of those inaccurate negative items removed from the credit report. Around 70% of credit reports right now out there in America have inaccuracies attached to them. So we have to do a
Wow.
full scrub process. We also do tons and tons of credit education. So the borrower, if they decide to enroll in our service, they'll have a one-on-one credit coach that can really work their file and really hold their hand, right? 95% of the borrowers that come through my front door, they've never been through credit 101 in high school or college. They don't teach that, right? Like, I have a 4-year business degree and I didn't take a single credit class in college. Like, they don't make you take it. Like, it's weird, but they don't make you take it. So I didn't, and no one else does. So by the time they exit the program, they're credit experts. And then we also help out with settlements and pay for deletion. So if the borrower has like valid collections on there, or valid charge-offs and stuff like that, we can help negotiate those for less and typically get those removed from the credit report after we get the correct documentation in place and everything like that. So that's a short and sweet version of what we do over at My Credit Guy. But like I said, we keep the borrower, we keep the loan officer, and the realtor all in the same page because, like I said, this is all about getting the home loan back to the closing table for you guys.
Yeah, and you said a few things in there that I want to unpack as we talk here. But the first thing, because you're right, there, high school and college, there may be some classes around general finance and that type of stuff, but there's really not much, for a young person to go in to really understand credit. There are some things we see on TV. There's some companies that advertise, and you and I talked about that off camera, and I see that a lot, right? I'll have a client that'll come in, we'll pre-approve, pull the credit, and the actual scores that we get vary from what they have received from, we'll just say, other outside companies. And a lot of times it's a pretty big spread. I've had one before where so and so company said my credit score was a 720 and I'm pulling a 550, right? So talk about that and help folks understand the difference in what they may see with some of these companies versus their score when I pull it.
Yeah, for sure, for sure. So any of your credit consumer companies that you're talking about there, right? Like any of them that are monitoring your credit is what I will say, are going to be using completely different scoring algorithms than what Glenn's going to be using when they pull your home loan, right? Usually those companies that we're chatting about, they are using Vantage scoring models, and they weight the items that they're weighing as far as like payment history, credit utilization, and all that stuff much differently than what Glenn's FICO model is going to be using, right? And there's stuff coming down the road too where they're going to be switching these models completely up and going to that FICO 10T, and that's a conversation for a whole nother day after it goes live. But they're going to be doing some like trended data and stuff like that as well. But right now, it's that they're using completely different scoring algorithms than what your lender's pulling. What I like to tell borrowers, and this is kind of, I don't want to say like savage or anything like that, but go to those credit consumer companies and ask them if they can get you a home loan. They can't, right? They can't. So you have to, as a borrower, use the score that Glenn's pulling. As a mortgage loan officer, he's the one that's going to give you the give you the money for the home loan that you're trying to get, right? So you can never trust those scores. I tell people that you can use those channels and avenues to really like monitor your credit. They're good about like letting you know if you add a late payment or add a collection or something like that you should address right away. But as far as the scores go, like I throw them completely out the window, right? I hear it all the time too, man. Like, oh, I'm at a 720 on this score, then we'll pull it with the lender, and they're like you said at a 550 or 560. It's like that's 120 to 150 points difference sometimes, and it's crazy, but it happens more often than not. And there's no rhyme or reason to it either. I've seen scores on both sides of those, right? So I've seen
Yeah.
people go over to a lender and say my score's a 720, and then it comes back at a 580. And then I've seen it where they're like, oh, I'm at a 580, and then it comes back at a 640, right? Like there's just no rhyme or reason. So don't trust those scoring models, please.
Right.
That's the name of the game. Don't trust them. Like you just can't.
Well, and here's something else you said that I wanted to unpack and talk about, and really a compliment that I want to give to your company since we've started partnering together, is the communication path that you and your team have. If you put 100 real estate agents in a room and ask them what's the most important thing in partnering with a mortgage lender, communication is going to be one of those top things. And for clients, and especially, I think all clients, but especially first time home buyers have never been through the process before. There's a lot of anxiety around what this is going to look like and how it's going to go, and communication is critical for those folks. And you mentioned it earlier when you mentioned real estate agents, right? So we've talked about consumers, but also the partnership you guys have with agents. Walk through that process, because you'll explain it a lot better than I will. I've had a great experience with it so far, but client comes to me, we've got some bumps and blemishes we need to address to get that client to a spot of being pre-approved. I upload them in your database and then take it from there for what that process looks like with you guys, both with the clients and with the real estate agents.
Yeah, for sure. So everybody's kept on in the same loop, right? When you send it over, you're attaching the realtor that client is attached to. So that way, anytime that either myself or my team, because you'll see updates from my team as well, right? Like my credit coaches and stuff like that on the files. But you'll see every single update includes the borrower, the loan officer, and the realtor all in the same line of communication. Just because, like I said, like we don't want the realtor to go out and start looking for homes before the credit's ready, right? We can't have that. So we have to make sure that they're kept in the same loop as my credit guy and Movement Mortgage, just to say, hey guys, like we have another 2 months left or whatever the case is, before we should start looking, because you don't want to get the borrower looking for their dream home when they're not pre-approved or pre-qualified,
Right.
right? It's just the name of the game. You gotta keep everybody in the same loop. The cool thing about it though, guys, is before the borrower even enrolls in my service, all of the game plan, the to-do list that they have as far as like what they need to do on their end, because my program can get borrowers around like 75% of the way there, right? Another 25% is going to just be them doing things that they need to do, right? Whether it's pay down your credit cards or set aside funds for settlements and pay for deletions, or some people need to add positive positive trade lines. If they don't have enough credit utilization or positive pay history, they need to add some. So all of that's confirmed with every single party before they even enroll in my service, just because I don't want the realtor to come in month 4 and know that this month, maybe we quoted them 6 months to start. Maybe it was a 480 borrower and they needed a little bit more time to get back up to that 620 mark or whatever the case is. We don't want the realtor or the borrower miscommunicating with anybody involved, right? Just because that causes more headaches, it causes more speed bumps and everything like that. At that point, it's just easier to make sure that everybody's at the same loop, same communication. They're not doing the thing where they're reaching out to the realtor saying, "Hey guys, we need to go look at homes." No, we're all on the same loop, and we make sure that's the case. I get email updates and email responses from realtors that I've never talked to in my life, right? And they're so receptive to these updates because they're kept in the loop, right? Like they want to know what's happening with their borrowers, and the borrower wants their realtor to know what's happening. So that way, when it
Yeah.
is time to hit the ground running, you guys can do that. You can re-pull credit, and then they can go start searching for homes. So it's a big collective effort over here that keeps everybody in the same page, though.
That's great. Hey, so you mentioned earlier about sometimes folks need some help building some credit, and so for a first time home buyer who may be watching this and saying maybe I've got one or two things, but you and I talked about this off camera. What are some things that whether it's a first time home buyer or anyone, what are some things we can do to make sure that we're keeping our credit clean? We're building positive credit, and we're managing our credit in a way that our credit scores are increasing.
Yeah, yeah, absolutely. So the first thing is, and this is my main tip for all borrowers, right? Just because once you go down the bad path of credit, as far as like adding a late payment, adding a collection, stuff like that, there's no like quick fix to bounce back from that, right? It's just not like I don't have a magic deletion button under my desk. I wish I did. I would charge thousands of dollars for our service, right? But I don't. I don't have the magic deletion button. So the main tip that I have for everybody is get your stuff on auto pay. That is the first and primary thing that you need to do, whether it's a $25 Capital One bill or your auto loan, just because once you add that 30-day late, like I said, it's not good from there because
Yeah,
I'm not able to get that 30-day late removed if it was truly 30 days late, right? There's a thing that we can send out that's called a goodwill letter to try to get them to remove it out of the goodness of their heart, but they're not in a violation of the Fair Credit Reporting Act or the Fair Debt Collections Practices Act or anything like that. So it's really them doing it out of the goodness of their heart. So the first thing is my main tip is always get your stuff on auto pay. As far as managing your credit, you need to have around 2 revolving lines of credit open. Now, if you have more than that and they're in good pay history, you have the balance to limit ratios where you need to go, where you need to be under 10% balance to limit ratio, then leave those open. You do not close out good accounts, especially revolving lines of credit, because what happens is after you close that account out, you're actually going to lose all of the payment history that's attached to it. So that's why sometimes, Glenn, you'll see, and I've seen this numerous times. I mean, in my line of work, tons and tons of times at this point, but you'll pay off an auto loan. And what happens is you actually drop your credit score because what happens is all that payment history that you've had over the last 5 years or 4 years, whatever the auto loan was, you lose all of it. So you don't
yeah,
get any payment history. That's why the algorithms, the scoring algorithms like to see those revolving lines of credit, because you can have a revolving line of credit open for 40 years if you do it right, right? So like you need to keep it under 10% balance to limit ratio. There are certain thresholds when you're dealing with revolving credit, which is credit cards. I know no one likes the term credit card. Everybody, myself included. I'm from Iowa. Like my grandparents and parents were like, if you don't have it in cash, you don't need it,
that's
right? And then
right.
graduate and then I find out really quick that's not the case, right? The thing is like there are certain thresholds when you're dealing with credit card debts. 10% below the balance to limit ratio. So if you have let's say $1,000 credit card, you need to keep that under $100 at all times if possible. Now I understand sometimes people will do the thing where they rack it up and they pay it down, they rack it up and they pay it down. That's fine for now, but like I said, coming to fruition pretty quickly is going to be what's known as trended data. and that's not gonna work in the future. If your credit cards are over 50% balance to limit ratio, guys, so if you have $1,000 credit card and it's over $500 on the balance side, that card is actually hurting your credit too. Whether you've had 20 years of on-time payments or not, anytime the algorithm sees a 50% or above or balance to limit ratio on revolving debt, it actually dings your credit score. So make sure that they're always under 50% if possible, but ideally you want those under 10% balance to limit ratio. That's where you get the most bang for your buck. And on a monthly basis, they start to recognize that you have good payment history, credit utilization, and you're building that length of history as well. So yeah, those are the main two though, right? Auto pay and keep your cars under 10% balance to limit ratio. That's how you're going to maintain and boost your credit from here
That's
on out.
great. Yeah, the auto pay thing, that's one of those that, it makes sense to hear you say it, but I'm sitting here thinking there's a few things I have that's not on auto pay that should be, so like you said, that's just an easy tip because life happens and
Well,
a bill can get lost in the mail and not make it to your mailbox. And, like you said, all of a sudden you're 30 days late and not at any fault of yourself. Sometimes life can happen. So that's a good tip, man. Now I want to ask you this, and maybe this could be either confirming something that's been thrown around or maybe dispelling a myth, one of the two. So you talked a second ago about the balance to limit ratio. So say I'm a consumer and I fit in that bucket of I've got $1,000 credit card and life has happened. I had an expense that I had to charge to it. Maybe it was $600, so now I'm at 60%. That's hurting me, I guess, in a sense, because I'm over that limit. Is that client better having 2 or 3 different credit cards with that balance spread out to keep them under that limit, making on-time payments? Would that help their score as opposed to having one card that's above that limit?
yeah, I mean, I have borrowers that spread out their balances all the time, right? The main thing is you want to keep it under 50%. Now, if you're over that 50%, if you add another positive trade line to transfer the balance or whatever the case is that you want to do, totally fine. You just got to know when you add a positive trade line like that, you're gonna initially see a little ding on your credit, right? You're
Right.
gonna have the 2 to 3 points that it's going to hit for pulling credit with your inquiry. That's a no. It happens, but 2 or 3 points you're going to bounce back from in a couple of months, right? So the cool thing is yes, that is how you want to do it. Now, say a borrower, Glenn, they have 4 credit cards and they're all maxed out, right? Here's another scenario that we're kind of just going to piggyback off of this whole thing as
Yeah.
well. Now, what you want to do if you have a big lump sum of money, but not enough to chunk them all the way down to 10%, right? And this is a situation where you got 3, 4 credit cards that are all maxed out and you're just trying to figure out where to start. You need to get all of those credit cards below 50% balance to limit ratio before you focus on any of them under 10%, right? Just because when you're looking at it and the scoring algorithm's looking at it, if they see a credit card that's maxed out and they have one that's at 10%, they're going to put more weight on the one that's maxed out for hurting your credit score than what they're going to put on the one at 10% for that's actually helping your credit score from by being under that balance to limit ratio, right? So the name of the game is always keep them under 50% if possible. If you come into a lump sum of money and you have them maxed out, get all of them under 50% first and foremost. And then there's another threshold where you start to actually see some nice little score increases as well. That's at like 30% balance to limit ratio. So if you can get them below 10 to 30, you're doing really well. Under 10 is obviously ideal, right? But you just want to make sure that they're, if possible, always under 50% because then they don't hurt your credit score. But I understand life happens. I've
Yeah.
been there. Everybody's been there, right? You just go start chunking them down, get them all below 50%, and then that gives you a nice little breathing room as well.
That's great. That's great, man. This is the kind of knowledge we need from a guy like you, man. I'm learning stuff today.
I love
Um,
it.
I got 2 more quick things I want to ask you about. I know you got some other stuff to run, but this is great information.
I
You
love it.
mentioned something that triggered a thought a second ago. So let's say for a client that's out there, maybe initially they got approved or went through a company for a pre-approval. Company pulled their credit and maybe ended up not having a product for them or told them they couldn't do it. They came to Movement. They came to me for a second opinion. A lot of times I get the question of, hey, company XYZ across the street pulled my credit last week. Are my credit scores going to be affected if you pull it today?
No, sir. No, absolutely not. The way that it works is in the mortgage industry, you actually have 45 days. Now, I don't tell people to always like go shopping around. But like you said, in that scenario where they don't have something for you, you go over to Glenn and Movement Mortgage and they pull your credit. If it's within that 45-day window, it's only hurting your credit once. So even though it'll show up on your credit report as another inquiry, it's still only hurting your credit from that first initial one. And like I said, they're only hurting your credit like 2 to 5 points max. I know a lot of people get all uptight and hurt about their inquiries, right? Like
That's right.
we got to get those removed. It's like if I get the one collection removed versus those five inquiries, you're going to see your credit skyrocket way more than that. Just because inquiries, once you give the okay for someone to run your credit, it's going to be on your credit, right? There's no way like I don't just go after them to
You don't
try
have a
to get.
delete button for that either, right?
Right, exactly, man. Exactly. Now, if it was a valid, like, no, you didn't give them anything, or you didn't give them okay to run your credit, like, by all means, I'll go after them and everything like that. But like, we're gonna get more points by, like I said, chunking down your credit cards and working on the other negatives on the credit report in that situation. But the cool thing is like I said, 30 days in the auto industry and 45 in the mortgage industry is what you
Awesome.
have.
Good to know, man.
Yeah.
All right. Last thing I'm going to ask you, I want to end, and I didn't tee you up for this. So, off the cuff here, I love a good feel good story. So do you have one that comes to mind, maybe recently of someone that came, maybe not even from us, from my team, but do you have a good one, that you can share of a good feel good story of somebody came maybe with not a whole lot of hope, didn't think there was the possibility of owning a home. You and your team stepped in, walked them through the process, and now they've got the keys to a house.
Yeah, for sure. So there is actually a borrower. So at this point, we get borrowers back for Movement Mortgage on a weekly basis, right? Multiple borrowers are going back to the Movement crew that have started with my credit guy and end up on at the closing table because they've done the steps that are needed, right? I'm not the magic little button. I don't have little buddies over at Experian or Equifax that I can call up to help you out, right? The feel good is when a borrower comes to us and they come to us with a 540 credit score. And this was for a lender out in North Carolina for the Movement crew. They started at a 540 borrower about 3.5, I think, months ago. 3.5 months ago is what they started at. They needed to add a couple of positive trade lines. They did that immediately, right? Because when the team and my team steps in and they say, "Hey, Joe Schmo, we're at a 540 credit score. We need to get you to a 620 for the FHA home loan that we're trying to get with Glenn." There are certain steps that you have to do as a borrower. If my team tells you to add some positive trade lines to start boosting that pay history and credit utilization, you have to do it. That's the way that it works. So this borrower immediately did that. We got a few of the inaccurate negatives off their credit report. I think he had like 7 collections. We got like 5 of them removed because they were in violation of the Fair Credit Reporting Act, and then another 2 of them were actually medical collections. So those were verified. But in July of 2022, I'm sure you know this, Glenn, and all the movement does at this point. But they came out with that new little law that if a paid medical collection is on the credit report, by federal law, it has to be removed from their credit report. So we reached out to the medical collections. The borrower paid those off. They went from a 540 credit score to a 670 in a matter of about 4 months, and they're closing on I think 12/30 of this year. So right before the new year, new home, everybody's ecstatic. Loan officers pumped because they got a new home loan. Realtors excited because they don't have to give the news that we're looking for apartments instead of home loans now. And the borrower loves it because now their Christmas present to their kids is a new home loan in a backyard they can play in, right? I'm
Love
getting
it.
good, man, like just talking about it. Like
That's awesome.
those are those stories that, like I said, when the borrower comes to us and they're ready to hit this head on, I can get you guys back to the closing table. There's no doubt about it. Like my system works, my team is awesome. We have partnerships with Movement Mortgage. We have a partnership with Movement Mortgage that's second to none. We have the technology in place to get you back there as soon as possible. Sometimes it's 3 months, sometimes it's 6 months. It just depends on your situation, and it really does just depend on what you have to work with as far as like funds for settlements, pay for deletions, and all that good stuff too. So like I said, that's the one that rings a bell just
Love
because
it.
I literally got the email from it. So
I love it, man. I've got one, probably 30 minutes before you and I jumped on. I got an update on one that I sent last week, where client has enrolled in the program and got the overview of what needs to be done. And that one's going to be a 60 to maybe 90 days at worst case.
Yep.
and she's excited. I'm excited. It's gonna be awesome getting to the closing table with her, all because of the help of you guys. So I think, man, wrapping this thing up for a couple things. One, for folks that maybe have just run into roadblocks with other lenders, knowing there's some bumps and bruises. There's hope, there's help. And there's a company with Chris and my credit guy that can put a plan together, get you on the path to get there. And then for real estate agents, same thing. Any clients that maybe they've had where, they ran into a no somewhere else without a path to get them to a yes. Movement and Chris and my credit guy have a solution to get you on the path to home ownership. Now's a great time to buy. This market has gotten a bad reputation over the past few months, but
Yes, and I
rates are
don't
coming
get it.
down, inventory's coming back, and now's a great time to go out and buy a house.
Absolutely. Absolutely. Well, I'm glad that we could do this, Glenn. Like I said, man, anytime that I can answer any of the common questions and tougher ones too. If you
Yeah,
got if your borrowers or your real estate agents are running into things that like are one-off questions, like get them over to me. CC me in on an email. You know how it goes, man. Like I'm Movement's go-to guy over here at this point, and questions, concerns, suggestions, anything like that, you come to me because I'm going to take care of you and make sure that you get back to the closing table. Like I said, it's just a matter of time sometimes with these borrowers, right? It's
yeah.
making that these borrowers, follow the game plan, do what my team is suggesting and asking you to do, and you're going to end up getting the new keys to your new house. So I love it, man. I love it. And I love the industry that I'm in because it makes it easy for me when there's a bunch of bad credit repair companies out there.
That's right. One of the good eggs in the business. You guys are
Absolutely.
that for sure, man.
Absolutely. Yeah.
So thank you, brother. I appreciate your partnership and everything you guys do to help and support us. And hey, let's do this maybe once a quarter.
I love it. I
Um,
will. Yeah, absolutely. There's always new updates too, right?
yeah,
Like the trend of data that they've been talking about for years and years now, it's actually coming to fruition. So that's going to be a good one that we're going to knock out. And we're going to be doing common credit education with the movement crew as well. All of movement's going to be invited, so that way we can
yeah,
really make sure that everybody's on the same page. Credit's messy, like it is. There's a lot of different updates that happen on a monthly basis, and we like to be the front and center of mind just to make sure that we take that off of your guys' plate as well. So I'm down to do it once a quarter or once a month,
I
man.
am
You
too,
just let me
man.
know.
Thank you, brother. Let's do it.
Love
And
it.